the main reason the consistency rule exists, we explained over here, we're making sure that traders aren't just coming in, punting, having one or two lucky trades. And I think in instant funding, it's especially important for us to have these safeguards in place so that the right people get rewarded and not the punters. The real traders who are consistent in generating profits should get rewarded. That's what the whole prop firm ecosystem should be about, in my opinion. You know, this whole ecosystem, right, should be set up in a way to reward the traders that are actually good performers and not the people that get lucky.
Another simple way to basically work it out is if your biggest day is $500, you take 500 divided by 0.2. If it's a 20% consistency, or if it's a 33% consistency, you divide it by 0.33. So that's another simple way. And then that will give you the total amount of profits you need to make in order to be able to take a payout.
What's going on, guys? Welcome back to the Challenge Accepted podcast. Have you ever gone into a Forex, crypto, some type of prop firm challenge or instant funding, which, by the way, crypto instant funding not available at hydrofunding.io, just saying, and wondered, what are these rules? What is this thing called consistency requirement? What is a trailing drawdown, right? I think these are two of the most misunderstood or maybe unknown kind of like requirements for new traders that are coming in, because they're not the most straightforward to understand. It's actually very simple, but you know, it may be a little bit daunting at the beginning. So in today's podcast episode, we're actually going to go through what exactly a consistency rule is, right? How does it work in terms of numbers so that you can leave with the understanding that this is exactly how I'm supposed to play around with this rule. What does a 20% rule mean? What does a 30%? What does a 50% rule mean? What do any of these even mean, right? So that's a big one. And then we're also going to talk about how trailing drawdowns work, especially in the case of hydro funding, because we have even though like our instant accounts do have a trailing drawdown, it stops at the initial balance, which is not the same across all firms. Like we don't trail indefinitely. So we'll go in and we'll explain how the trailing works, the different mechanics and caveats that you have to look out for when it comes to trailing drawdowns. And hopefully, if you're interested in one of these two topics or had questions about one of these two terms, by the end of today's video, you will be a lot more familiar and understand how to apply yourself when it comes to playing around and staying within the boundaries of these rules and not blowing up your account, right?
And I think these are the main two rules that I think everybody needs to know if they are looking to take an instant funded challenge. I think it's going to be quite big. Obviously, crypto has just come out. The instant funding with crypto has just come out of Hydra, and Forex, the CFDs is coming to soon too. But I think these are the big two rules that a lot of people get maybe a little bit confused about. We have to clear it up.
Yeah. So we'll just dive into it with the consistency rule. I'm going to go ahead and share my screen here so that you guys can follow along. I'm just going to take the section from the Hydra funding FAQ and really like run this through. So you guys can see that here in our crypto plans, we have a 33% consistency rule for our 1-phase and 2-phase challenges. Our 1-phase and 2-phase challenges used to have a profit and drawdown cap, which has been removed and replaced by a 33% consistency rule. There's now no longer any daily max drawdowns on our challenge plans as well over on the crypto side. All right, so consistency, say that 5 times fast. Consistency rules, I think, are, once you get your head wrapped around it, a lot more, let's say, friendly towards traders rather than absolute, drawdown or profit caps. So when you look at this 33% consistency rule, we want to talk about what exactly it means and how you can trade around it, right? So the main reason the consistency rule exists, we explained over here, we're making sure that traders aren't just coming in, punting, having one or two lucky trades, right? Like that's just not what we're looking for as far as traders and the people that we want within our ecosystem. So going into the exact way to calculate this, right? The simplest method is this formula. Best trading day PNL divided by total PNL times 100. You'll get a percentage number, right? So if you ever have any questions around this, on the Hydra dashboard, you will be able to view all the information. We will give it to you. You won't need to do any math. Don't worry. This is just for educational purpose. So you actually understand how the numbers work. right? So if, let's say
You hasn't done math since high school.
I'm Asian, bro. I don't need to practice. I was born good at math. Um, so, for example, our consistency rule is a 33% consistency rule, which means your largest day P&L, right? Your most profitable day P&L cannot be more than 33% of your total profits. In order to be eligible for a withdrawal, or in the cases of challenge, to pass the challenge, you can't just have one shot, right? Like 33% means if you've made a total of $10,000 in profit, that your biggest day must be no larger than $3,300. It's really, really that simple, right? $3,300 is your biggest day. $10,000 is your total profit. You take that 3,300 divided by 10,000 and you get 0.33 times 100, which is 33%. So this is just it. Like, this is really it. So if you want to think about the scale, right? Maybe I'll let James talk about it a little bit, because we're sitting here at 33%. James, what are you used to seeing across instant funding, plans? What are you used to seeing as far as consistency rules go across the market? And then maybe we can take that as an example and compare how, I don't know, something not 33% would compare, right?
Yeah, across the board, I'm used to seeing actually a 20% consistency, which is obviously a lot more tough, right? But yeah, another simple way to basically work it out is if your biggest day is $500, you take 500 divided by 0.2. If it's a 20% consistency, or if it's a 33% consistency, you divide it by 0.33. So that's another simple way. And then that will give you the total amount of profits you need to make in order to be able to take a payout.
Shit, James can do math too. Who would have thought?
Yeah, exactly. South Africans can do math too. But basically, I think in terms of the consistency rules, what I'm used to seeing, as I said, is 20%, which is obviously a lot more tough than 33. So I think 33 is pretty lenient. And I think the instant funding, there has to be these type of rules, because obviously, you're able to make money from day one. Compared to obviously the challenge phases where some guys might enjoy that, where they come in and punt one or two trades. You can't do that on the instant funding. You have to trade more slow, steady, consistent. Like, you would rather come into the instant funding and make like your 0.3 to 0.5% per day, rather than coming in and punting and trying to make 5% in one trade. So that's what I've been doing on my instant accounts, and it's been working for me. But you got to find what works for you. Some guys want to go for the bigger, if you make a big day, that means you got to go make more profit. So you want to keep that like in check, I would say personally. Yeah.
That's very, very well put, right? Like what James has said is basically the other way to kind of calculate if you have a big day, right, trading an instant or any account that has a consistency rule, you should take that big day and just divide that by basically the consistency rule to figure out how much the total profits needs to be, right? That's just how it works. It's a very simple mathematical formula. It's just very, very straightforward. Don't need to overcomplicate it. The one way you can look at it is if you want to think about it in terms of days and how does this apply, right? We're just talking like numbers right now, but how does this work in real time? Like, how does this translate into how you should trade the account, or what does it mean for trading? All right. So for example, a 20% consistency rule means that basically you have a minimum of 5 trading days.
Yes.
That's how it works, because 5 times 20 is 100%, right? So if your biggest day can only be 20%, then that means you need at minimum another 4 days with that exact same profit number. And let's be real, trading is not like that. So in all likelihood, it's probably going to be at least 6. It's very unlikely you're going to make exactly the same amount 5 days, 5 trading days in a row, right? There's going to be some ups, there's going to be some downs. So overall, this just means that it's going to take longer for you to be eligible for a payout, because you could be stuck in profit, right? And still not be able to make the payout because you're not meeting the consistency rule. If your one big day is too large and your other winning days are very small, then you might need multiple winning days in order to get that number to come down, because you need to accumulate those profits over time, right? For example, if let's say someone on a $100,000, instant funding account, this person on day one, like let's say James on day one made $3,000 of profits trading his instant funding account. He's up $3K, right? At a 33% consistency rule, that would mean he basically needs to make another $6,000 Correct me if I'm wrong.
Yeah.
Should be $6,000, right? He needs to make another $6,000 over the course of 2 days in order to be eligible for withdrawal. Now, if that was a 20% consistency rule and James made $3,000 on the first day, he would then need to make an additional $1,200 in order to be eligible for payout, because 300 divided by 1,200 is 20%, right?
Correct.
All right.
Yeah. So the bigger your biggest day, you don't want to actually have that. You don't want to make that too big, because then you got to go make more to be able to take the payout. So the goal.
So surprise, surprise, consistency rule is exactly what it sounds like. It's meant to reward consistency and prevent gambling types of behavior.
Correct.
That's really it.
Because if you come in and you punt and you make one big day, well then of like $2,000, you're gonna have to go make 10 grand to get the payout.
Yeah.
Basically.
Yeah. So, let's say if I on 100K, because I have big balls, I made $10,000 on my first day, but I was betting big, right? Then that means I have to make, on the 33% consistency rule, I have to make another $20,000 on that account in order to even be eligible for withdrawal. So sizing is very, very important. We're going to get into the practicals now of like how to approach. I'm sure James has tips as well, because James has been over here trading instant accounts. I've never traded an instant account. James, how do you approach this? Right. Like as far as like understanding, okay, I'm at a 20% consistency rule or 33%, it almost doesn't matter, because a consistency rule is a consistency rule, right? Like it's just a longer or shorter period of time. So how do you take this into account to make sure that you're making money, but also making sure that the consistency rule doesn't come to bite you in the ass?
Yeah, it just goes back down to your risk, right? So you got to be risking. Normally, what I'm focused on is like 1 to 2% in a day, on a trade. You don't want to be making more than ideally 1% is like kind of like the max what I'm aiming for personally. If you're doing more than that, I think that if you make 1%, you basically on a 20% consistency rule. Let's just use 20%. It's just a little bit easier. You got to go make 5% to actually take the payout. So personally, for me, I'm focused on like trying to make my 0.3 to 0.5% per day. But then you can do it across, maybe 3-4 accounts with Hydra, with, a couple of 50K accounts, and that adds up. So with the instant funding, yes, you're not going to come in and punt and make 10% in a trading day. If you do, it's just would be extremely silly. So yeah, that's not going to happen. But in order to make consistent money from it, I would say you would want to be aiming for like that 0.5%, per day, and you're going to be in a good position, at the end of the month whenever you're eligible to take your payout. So that's what I've been aiming for. It's what's been working for me. That's probably like the sweet spot, bro. I think if you're making make more than 1% in a day, you extend, particularly on a 20% consistency. Nice Hydra's got that 33%, which is obviously a lot better. But you got to go make a lot more in order to be eligible for that payout. So that 1% in a day is probably the sweet spot. You don't want to do more than that.
Yeah, pretty much exactly how I think you should play it as well.
Yeah.
Managing your risk is key, right? Like if you're risking 1%, and let's say you have a 1 to 2 RR on average, right? You're making 2% gain. So on a 33% consistency rule, that means you need to make a 6% total overall gain now in order to be eligible for withdrawal, right? So being able to keep your risk consistent, not have like huge wins, huge losses, like being able to keep your winners consistent and your losers consistent, right? Like so that you don't violate the drawdown. Like this becomes even more imperative when there is a consistency rule. I cannot stress how important now risk management becomes, right?
Correct.
You have to view this as like your baseline for good trading. What I was telling James when we were launching this was
side as well. Not only managing risk to the downside, but even to the high side as well. Like as I mentioned, you don't want to go make 3-4% on that because you're just extending how much you need to make to take the payout.
Yeah. Correct.
And a lot of people will say, a lot of traders will say, oh, well, the consistency rule, it's I don't like it and it's a scam and all that crap. You're getting an instant account where you can make money from day one. In order to actually do that, there has to be some, like, you have to be rewarded for that. That's the consistency.
I mean, I don't like, for anyone that doesn't like the consistency rule, why don't you go fund your own account, huh? No one's going to tell you anything, right? But if you want to play in the prop space, right, in all in all seriousness, we have rules put in place to really combat gambling type behavior. This is one of the biggest issues in the industry. One of the biggest reasons why, some firms probably in the past have been unable to pay out. It's because the rules are too lax, right? Like the rules are way too lax, and you're allowing punters and people that are going to abuse the system to try to come in, right? There's multiple layers of defense that we're talking about, just as far as like fighting prohibited behaviors, people colluding, taking advantage of unrealistic fill positions. Like we see a lot in the industry. But the main thing with the consistency rule is fighting one of the biggest issues in the industry, which is the gambling, right? If you imagine if you had an instant account, right? You just came in and you wanted to punt, you wanted to bet the full account size, on one single trade. I mean, we've seen traders
30%.
Just even numbers wise have risked as much as 30 to 40% of their account on a single trade. And this is definitely prohibited behavior. If you want to trade like this, if you want to go and trade a funded prop firm account and you're consistently risking 30 to 40% of the account per trade, please know that the prop firm is going to notice this. Okay, we have algorithms and risk teams watching this type of behavior, and this is exactly not that. Like 30 to 40 is ridiculous, right? Like, come on, you would never do that with your own account. So why would you do that with a funded account, right? So there's certain behaviors that we really watch out for and try to eliminate, via the rules. And I think in instant funding, it's especially important for us to have these safeguards in place so that the right people get rewarded and not the punters. The real traders who are consistent in generating profits, right, should get rewarded. That's what the whole prop firm ecosystem should be about, in my opinion, right? Like whether you A book, B book, whatever it is you do with your firm, I don't really care, right? Like ultimately at the end of the day, the trader doesn't care either, as long as they get paid, right? And I think the whole prop firm ecosystem as it's set up should be a game that essentially rewards good traders, just like the markets would, right? It's the same concept. It's the same thing. It's just packaged a little bit differently, and it allows even more separation and distinction between punters, gamblers, as well as good traders. Because good traders can now come in, take advantage of something like instant funding, right? If you're a very good trader, you know that over the course of, 2 weeks, right? Like a 33% consistency rule should not be a problem. If you just had a normal, good 2 weeks of trading, this probably isn't even on your mind. Like I look at a 33% consistency rule and think, I swing trade, so it might take me a little bit longer, but this isn't really an issue because my winners are always around the same size. My losers are always around the same size. I'm consistent as fuck, right? Like this is not really a rule or a consideration for me.
I've just started to take my first instant accounts, and I took one with a firm 2 weeks ago. I started to trade it after 9 trading days. I took it on a 100K account. I took a $2,400 payout, and I shared that on my social. So that was from 9 trading days. You can't do that on a 2-step account because then you would only just pass. I made 5% on the account. You would have just passed, not even passed phase 1. So yes, I didn't make one big trade in one day, but I did consistently like 0.5%, 0.3, and I stacked the wins up. That's what the instant funded accounts are for. And I think that, again, like as you mentioned, it rewards consistent traders. Is it for everyone? No, if you're going to come in and punt, that's not for you. But is it for a trader that likes to stack 0.5% days, 1% days, and doesn't have big outsized losses, outsized wins? I think it's brilliant. For me personally, as I said, I've taken a bunch of instant accounts this past month. It's been probably the best account that I have enjoyed trading, simply because I bought the account, I made money from it 2 weeks later. That's not happening when I was buying the 2-step account. So personally for me, I think it's going to be, it's great for the trader that wants to trade so consistent, steady gains.
Yeah. Like I said, this whole ecosystem, right, should be set up in a way to reward the traders that are actually good performers and not the people that get lucky. If you think about it as a zero-sum game, right? Like let's assume that every single firm under the entire prop firm umbrella is booking 100% of trades, right? There's only this much money, right, from the revenue to go towards payouts. So if you've never thought about it this way, think about the rules that the prop firm set as the guidelines or the rails so that the money can be, the payout money can be funneled towards the best performers and not the luckiest people. Just
Yeah.
that's the way that you should look at prop firm rules, because quite honestly, that's the way that they are planned, right? If when you're building your program, when you're building out the risk, when you're analyzing everything, you want the program to have these guidelines so that people can be rewarded for the correct behavior. It's the gamification of anything, any type of game, any type of, even community, right? Like you gamify by rewarding the behaviors that you want and the people that deserve it. Imagine if you allowed all the punters to come in, everyone that's getting lucky is making huge, massive payouts, right? Like the company is liable to go bust, first of all. And the more of these lucky guys making the huge payouts are being rewarded, that means the less the consistent traders are being rewarded, because consistent traders are probably making smaller increments of money, right? Like James is not out here saying, I made $200,000 in 9 days. No, he's made
No.
solid gain on his account, and anyone would be happy to take 5%, right, in 9 days. I'd be thrilled. Is it some news breaking amount of gain? Absolutely not.
No.
But this is what most consistent traders look like.
Yeah. Let's also speak about, so on that account, I made 5%, but I was eligible to 50% of the payouts. And then I took the full draw and I got a new account. Let's speak a little bit about like what Hydra's going to be doing. What is the payout split's going to be for you guys? And then let's also speak about the trailing drawdown locking in at the initial balance. Do you want?
Yeah. So we'll touch on the payout split real quick, because I'm sure you guys understand this number. We don't need to talk it to death. On the instant side, the payout share is at 75%. This hasn't been finalized for the FX side, but it'll follow something very, very similar. So it's a 75% flat payout share as far as
every time you take a withdrawal from the account.
Yeah. It's just a flat 75%. What did you say was the last one? You got 50% of the shares? How does that work?
You say again?
How did the previous payout work? I thought you said you got 50% of.
Correct. Yeah. So I got 50%, and then when I took the payout, I got like a brand new account for free, in terms of like they just give you a new account. It's not like they trailing drawdown doesn't, like once you take a payout, doesn't lock in at the initial balance, which I know that's what will happen with Hydra, right? So let's maybe speak about that.
Yeah. So we'll touch on the trailing drawdown right now. Maybe like the best way is, again, to just look at the FAQ here. How do you calculate the trailing max drawdown? Trailing drawdowns, as I'm sure most of you are probably more familiar with, right? It's just if you make 1% on the account, the max drawdown goes up also 1%, the same amount, right? So this can work in a few ways. This can trail indefinitely, which means if you make, let's say, $100,000 and you make 40% gain on the account, it's trailed you all the way till you just have 5% from $140,000. The other way to do it is the way that we do it, which is it stops at the initial balance of the account, right? So once you make, let's say, again, $100,000 account, for example, you have a $5,000 max drawdown on the instant accounts, right? So you can draw down 5K. That 5K will continue to trail. So you make 1K, the max DD goes to 96, you go to 102, it goes to 97, right? But this stops when the trailing drawdown hits the initial balance, which is $100,000. It will stop trailing. So it will no longer follow you. So again, why we like this is because it forces you to manage your own risk. This again is not somewhere where you come in, you punt, you come back, you try to, you just try to bet the whole thing over and over again. No, we want to see and reward good risk management behavior within the ecosystem. So that's why it stops at the initial balance, because any profits, any type of additional money you make above the initial $100,000 or whatever the initial balance is should be your money to play with. This is your profits. We want you to be able to manage this however you want, right? So at Hydra, even if you build the account up to 120,000, 140,000, 180,000, $1 million, the max drawdown, right? The max drawdown is still going to be locked in at 100,000. It doesn't trail you anymore. So you can increase your buffer and increase and scale up your risk as you want. So you don't have to, like, your max drawdown doesn't necessarily have to be 5%, if you get what I mean. Like, it can be more, but it has to come from profits and not from the initial amount that we're allowing you to have, right? So if you look at this example, 100K, you can draw down to 95K before you would you would violate. You take it to 102. This is your new high watermark. Again, I want to stress that this is closed balance. All right. We don't calculate based on equity. This is always based on closed balance. Another thing you got to look out for trailing DDs is the fact that you want to make sure that it's based on closed profits, closed balance. I mean, rather than equity, because in equity you could be up a lot and then it's just in one trade and you go back to break even maybe, and then you violate. So you don't want that, right? You want closed profits. When I close a trade, that's the new high watermark. Yeah,
equity is the shit. Yeah.
Correct. Now, let's say you take your account to 108K, which will be your new high watermark. Your maximum trailing drawdown would just still be staying at 100K, even though you're more than 5% in profit, right? So regardless of how high your account goes, you only breach this rule if you drew your account back down to $100,000. Okay. Right. Quick note to take: the account locks at the starting balance upon the first payout request. So once you request your first payout for the instant funding side, the max DD would go to the initial balance. Okay. So this essentially means if you withdraw 100% of your profits, then the account will be closed. So you have to manage after first payout how much buffer you want to have remaining. Of course, you can always choose to withdraw all of it and start over fresh if you really wanted to, or you can choose to continue trading this account as if it was your own live account and take regular withdrawals from it, which I think is the smart way to do it, because why would you want to pay another evaluation? Just manage your risk and continue managing your money, and that's it, right? Like trade consistently. I think that's what instant funding is this really for, is if you think you can be a really consistent trader and you've got it in you, I think the instant funding is definitely worth the extra price.
Yeah. I agree. And you can build that buffer. And then as mentioned, it locks in at that initial balance. So you can continue building that buffer and you can continue making more money long term while not having to buy another account. So I think is definitely pretty neat.
Yeah, that's right. So that's kind of the clarifiers, and that's the explainers, right? Like two of these concepts that are a little bit more, let's say, nebulous, a little bit more misunderstood. And I hope today's episode has clarified that for you. James, anything to add for the viewers on the last?
No, that's all. I think that we explained it quite well. If you got any questions, make sure to put it in the chat. We'll obviously definitely get to it, but I think that we went through it quite well there.
Well, that's good. James has no additional wisdom to give. Anything about hair growth? No, not.
No. Hair growth. No, maybe golf swings. I can help with that, but no.
I might need some help with that. Thank you guys for tuning in. By the way, by the time this video is out, instant funding should almost be coming out for FX. So keep your eyes open for the instant funding for FX launching. I think you guys are going to like this product a lot. And as always, trade safe, and we'll catch you in the next episode. Peace out.